And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's Thursday, the 7th of April, and I'm back from the great United States of America, where I spent a week, just over a week actually, on all sorts of interesting projects, which I probably have to keep pretty quiet about. But anyway, Phil, did you miss me?
Andrew, you know I did. It just was not the same without you. And welcome back.
Thank you. Well, hopefully the work I did out there will come to fruition, but these things take a little bit of time after you've set them into motion. Anyway, look, we're now into the new tax year, so everybody's looking for ideas for their ISAs and things like that. So we need to come up with some good ideas, I guess. But it's pretty quiet out there. It's all quite difficult still. The war in Ukraine is still rumbling on. But of course, with the war in Ukraine, everyone is thinking about transitional energy. I notice even when I do my bike ride in at, sadly, just before 6 o'clock, because it's Wake Up to Money on Radio 5, and then it's Radio 5 Live at 6 o'clock with Rick, and I've forgotten what the lady's name is now. But even they're talking about transitional energy and that sort of thing. So when it's on Radio 5, it's all happening. Anyway, where would you like to start today, Phil?
Well, I would like to start on the subject of energy, because there has been a whole bunch of news. Announcements from the government on their plans for energy. Note that Johnson's revealed plans for 95% of Britain's electricity to come from green sources by 2030. Well, that's not far away, with big increases with nuclear, wind and solar power. Talk about modular nuclear reactors. There's also been a statement out from government on the UK grid operations as well, and the management of those. I don't know if you saw that, Andrew.
Well, there's a huge amount coming out of the government, but I mean, I think you've got to, people have to realise to put a nuclear plant into operation takes more than 10 years. So that's hopeless if your target is 2030. Actually, to put in an offshore wind farm takes about 4 years. So you can do that, but even that, you've got to get cracking and get it done. And that, of course, is why they're talking about onshore wind farms, because although nobody, likes them in their backyard, you can actually put an onshore wind farm up in probably under a year. And if you want to go green, it is the quickest and cheapest way of doing it.
Yeah, but absolutely. There's also context around this and the scale of what's needed. I mean, I saw some data quickly this week. This was from Renewables Now publication. It was saying that the world global deployment last year was 94 gigawatts of wind turbine capacity. 94 gigawatts. And put that in context, today, in fact, this morning I was just looking, the UK was generating 35 gigawatts, and 38% of that was from wind generation. So, these big deployments are lots of capital, and as you point out, they take time to deploy, just in terms of context.
Yeah, and look, this is a tech and transitional energy podcast and not an oil podcast, but obviously the government also is having a little review of fracking. Just for the record, I'm totally in favour of fracking. I believe it's completely safe. The sort of seismic reaction that we've been having, which is where they stop fracking, is the equivalent of dropping a honeydew melon on the floor. If you're worried about that when you're cooking in the kitchen, you should stop using melons or anything in case you drop them on the floor. It's far more dangerous than fracking. If you think we're going to contaminate the water, what the hell do you think the regulations are all there for? Fracking would mean that we wouldn't have to import LNG, which would reduce our carbon footprint by a factor of 4. It would produce jobs in the north of England, and it would create trillions of pounds of wealth, which is an amount of money that I suspect that probably people don't realise that they are missing out on when they listen to these Russian-backed protesters. Sorry, that was a slight sort of advert from me for fracking. Nothing to do with tech and transition energy. Let's get back on track. Look, the stock that's been moving a little bit on this whole energy thing coming up, and correctly so, and we've talked about it quite a lot in this podcast, is SSE. I think most people know that I'm quite a fan of SSE. I do own it in my pension. And it has actually been steadily climbing up. It's gone through £18 now. Obviously, we have Elliott advisors who have been trying to shake it up a little bit. I've been saying for some time I think it's worth £20. I still think it is worth £20. The only problem is, of course, from £18, that's only actually a 5% upside, which you could say isn't particularly exciting. But obviously, that's my target, and it can go on from further than that. But they're the way to play it, I think, aren't they, Phil?
Yeah, they are, and that's been a good spot by USSE. Did you see that they announced this week that to announce with Siemens Gamesa, who we know, of course, very, very well, that they're planning to produce and deliver green hydrogen through electrolysis using renewable energy from SSE's 100 megawatt Gordon Bush wind farm in the Scottish Highlands, which I thought was quite an interesting move for them. We talked a lot about hydrogen.
SSE and Siemens Gamesa do have an ongoing relationship. Obviously, what we also know is that if you're going to start doing electrolyzer fuel cells, whatever you want to call them, to produce hydrogen, actually, when you run those things, you do need sort of constant power. Otherwise, it all becomes quite difficult and tricky if you keep starting and stopping. If you're going to have constant power, you need some form of what's known as LDES, long duration energy storage. And of course, Siemens Gamesa have a joint development relationship with our favorite Invinity Energy Systems. And actually, in my view, SSE, who do have a small sort of venture capital arm, should probably be investing into IES because it is the little bit of the jigsaw they actually need to go alongside all their wind farms. The other thing I'll just say with SSE, and this is me purely hypothetically stating it, I know nothing, I promise you, but I have always said that actually Shell, who are trying to put a lot of money into renewable energy, SSE would be a wonderful target for Shell for the simple reason it would give them a massive renewable energy portfolio. But also because SSE is a high yielder, it wouldn't affect the sort of dividend payment that Shell's putting out because they both generate cash like I don't know what. So SSE is also, in my view, a bid target for someone like Shell.
Cool, blimey, right, okay. Well, that's SSE certainly in focus.
Yeah,
there's a lot going on there. And just continuing the theme of Siemens. Also, I don't know if you picked up there. Yeah, you did. We discussed this one. Siemens Energy. And they're planning to, they're starting up industrial scale production of electrolyzers, again, for green hydrogen in a multi-gigawatt factory in Berlin next year. So some money being put into this. So they're using proton exchange membrane electrolysis, the PEM electrolysis as it's known, and they are going to invest initially 30 million euros in this to set up production lines.
Yeah, look, I mean, again, there's hydrogen is one of the buzzwords out there. We've seen recently, haven't we, that, hydrogen one or whatever it is raising more money.
Right.
Everybody wants hydrogen. It's a bit of a buzzword. It can't be used for everything. And actually, it needs to link in with other forms of green energy in order for it to really, really work. It's a hell of a lot more complicated, I think, than most people realize. And actually, I'll tell you what, the other thing, of course, the way we want to play hydrogen, taking you slightly off track here, is through our picks and shovels pick, which is if you're going to have a hydrogen economy, you've got to have hydrogen storage. And therefore, you need these very high pressure cylinders up to 700 bar. And of course, Pressure Technologies is the play in the UK. It's quite a small company. It's only about a 30 million market cap or something. But it had its AGM the other day. And actually, the stock, I don't know if you noticed, Phil, has been absolutely rocketing recently, which is nice, obviously. I can't deny the fact that it's pleasing for me. I do have a shareholding in it. And it's now nudging on to £1. Having hit a low of about 60p, but it's going up pretty sharply. Again, it is a client of VSA, so I have to be careful what I say. But if somebody wants to get into hydrogen storage, you sort of need Pressure Technologies, and at that sort of market cap, it's looking pretty vulnerable because as you and I have been up there, Phil, they have an enormous, and I mean enormous, piece of real estate in Sheffield where they build these things. These things are not small. They are extraordinarily long, aren't they? And of course, with Pressure Technologies, you've also got them heavily exposed to defense because they make these for submarines. And right now, defense is pretty hot. And of course, they've got a precision engineering division, which goes a lot into the oil industry. And of course, the oil industry is pretty hot. So Pressure technologies, although it's rallied, as I say, quite strongly recently, I still think it's a complete and utter buy because it's ticking all the boxes at the moment.
Yeah, it is indeed, Andrew. It is indeed, and it's a super engineering company. And I mean that's exposure to hydrogen, but as you say, it's oil and gas and defence. Very unusual to be able to get that for an investment. Just quickly before we leave transitional energy, I saw Greencoat Renewables. So this is the ticker is GRP, and it's they're a big renewables fund, and they have said they've just raised 280 million euros in an oversubscribed placing. And Greencoat Renewables originally was in Ireland and wind farms, but they're now investing in wind and solar assets across Europe. And they're also generating electricity as well. So, I mean, in 2021, they generated 70 million euros of cash from electricity production. So it's an interesting, we've been talking a lot about wind generation this morning, but that's an interesting play in the sector to look at.
Yeah, and the other one's similar to that. You may have seen, I'm sure you did see, you don't miss a lot, do you, Phil? Well, we had results from Gresham House Energy Storage Fund, which actually, in fairness, were very good results. It's doing extraordinarily well. I mean, I do have a slight concern about all of these energy storage funds. They haven't allowed for what I call a decommissioning for when the lithium batteries run out, and how they're going to actually get rid of them, because you can't just throw them away. It costs a lot actually to recycle a lithium energy battery. But I'll just read one little bit from their results, which I think is quite interesting, and that is the board and investment manager are closely following the global response to Russia's military intervention in Ukraine and the ensuing humanitarian crisis, as well as considering the potential impact on financial markets, energy security considerations, power price volatility, and the company's business model. In terms of the impact on the company's longer-term outlook, for the moment, the indications are pointing towards a much faster rollout of renewable energy globally, with an associated increasing demand for energy storage projects. That, my friends, is why we are so bullish on LDES, which is long duration energy storage, and it has to be every form of LDES, because this is going to be massive, and there ain't enough lithium to do it all. So people are going to have to look at other things. And I'm not necessarily just talking vanadium, which I often do, but they're going to have to look at pumped hydro, they're going to have to look at compressed air, you name it. This is a massive space.
Yeah, it is, and my word, we've seen news flow and things starting to move. And
by the way, the UK government needs to wake up to this. If there's anybody in government listening to this, please wake up to the fact that, you keep coming out. Boris Johnson stands up and says, oh, we can do this, this, and this. Guys, you've got to help with the investment in some of these bits of the jigsaw that are required in order for it to happen. It's all, you can't just wave your hands around with your flappy hair and go hydrogen, 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 build wind farms. You've got to get people investing in the people who are actually helping make it all happen. Sorry, that was a bit of a rant.
Right, correct. But it is correct, and a huge amount of capital is going to be needed if they're going to do what they say they are, and move away, particularly from gas. So there we go. And then looking longer term on energy, still on the theme of energy, but technology. IP Group, ticker's IPO. The market cap's 950 million.
You're going to talk fusion, aren't you?
We are going to quickly talk about fusion, Andrew, because this is where I started my career originally years ago. First Light Fusion, which is one of their invested companies, say they have achieved fusion by spending less than £45 million. What is fusion? It's fusion together deuterium and tritium to get a nuclear reaction, and you have to normally do that about 100 million degrees in a thing called a tokamak, which is a massive magnetic vessel. And they cost billions of pounds, and Jet and Cullum is one example of that. But they're doing this using very, very high-speed projectiles hitting a target, their own target technology, and they're using gas guns to do that. But that looks very exciting. Now, obviously, fusion and the heat generated and doing it on a sustained reaction is going to take a long time to achieve. And the jet in Oxford's been open now for nearly 40 years and trying to achieve it. So, but nonetheless, I thought that was quite exciting news.
Actually, I get quite excited by fusion. I'll be absolutely honest with you. I mean, the ultimate fusion is the sun, isn't it?
Yes.
And if you could create a mini sun somehow, it would solve all of our power needs for the entire planet forever. But it's incredibly complicated. And sadly, fusion is probably still at least another 30 to 50 years away. Maybe sadly not in my lifetime, which is a shame, but there you go. But IP Group, I think it just shows that IP Group is not all about Oxford Nanopore. It's not all about Ceres Power. It has actually a portfolio of about 200 companies, and it has a few little hidden gems in there that could be very, very valuable. IP Group has come off significantly from its high, obviously, with the switch that we had at the start of the year out of growth into value. I mean, it peaked at actually about 160p IP Group. It's fallen all the way back today to 91p, so one hell of a fall. And I think its last NAV was around, this is from memory slightly, at 180p or something. Now you could say, well, has that NAV come down because of the decline in growth stocks? Because most of their stuff is private, it's probably correctly valued. I would suggest that IP Group is stunningly cheap at the moment. I'm a buyer. But I own it, so I would be a buyer, wouldn't I? But I do think it's genuinely a buy.
Yeah, well, can't be clearer than that. And in terms of, the NAV valuation and the Nasdaq and tech valuation, I mean, they were coming down, before sort of the latest NAV statement. So I think there's an element of that factored in. And of course, the US were announcing Fed last night. Andrew, is that right, on interest rates?
Yeah.
So tech's been obviously pretty sensitive to that, but I think there's an element now built into sort of tech valuations on inflation, interest rates. Anyway, look, moving on to tech, Andrew. One that we've looked at before, Traxys.
Yeah.
TRCS, 297 million market cap, interims.
They were all right, weren't they?
All right, thought they were all right. This is so for those of you who don't know, not listening, Traxys are a software and hardware company. They're very focused on the rail industry. And they have, their software, for instance, is used for, and they've got equipment that monitors the old trackside cabinets by the railway lines. It's got signaling equipment in there, and things get damp, don't work, and they've got kit that monitors the condition of that. They have software, for instance, that plans your staff, and train drivers. They've got safety software, so all sorts of things that the rail industry needs. And their interims revenue up by 30%. To 29 million, particularly growth in data analytics, that's interesting to see. They also said that the analytics business, that was up by 35%, so it's quite strong growth there, and also growth for their enterprise resource management software as well, which is used by train companies. This is the planning for driver software, but I thought that was a nice set of numbers for Traxys.
Yeah, and the outlook was quite good. It was within market expectations, but it was pretty positive. Traxys, actually, it's you can get your IHT allowance if it's in an AIM portfolio with Traxys. I'll tell you that because I run my mother's AIM IHT portfolio, and Traxys is one of the stocks that I have in it. And actually, luckily I bought it pretty well for her. And so we've actually had some very good performance. I bought it for a nearer sort of 500p, and it's now 1000p. What do you want to call it? £10. So although it's been flat for the sort of last year, I bought it when it actually had a very, very big run up just after the sort of pandemic broke out. So yeah, if you're holding an IHT portfolio, that's a sort of good stock, I think, to put in.
Yeah, it is high quality. I'm looking at the estimates on it, Andrew, and sort of multiples. And like it's on an EV/EBITDA of about 20 times, 417, indicating growth. But the net profit forecast, look, investors, you've got to do your own homework, check this out. But sort of consensus estimates, this was my kind of 10 million of net profit growing to 12 million. So growth growth forecast. But yeah, good, interesting story. One that wasn't so, sort of clear cut is Gooch and Housego. GHH is a ticker, 247 million market cap, and they had a trading update on interims to March. Gooch and Housego It's been listed for a long time. This one, I remember, I've seen this in the past. They have they develop, produce, and have IP in specialist photonic components, particularly for lasers. And the end application for them is in industrial lasers, telecommunications, life sciences. So, for instance, I know that their lasers are used in the semiconductor industry, and I think that's for silicon wafer scribing, but medical lasers that are used in elective surgery, but also medical diagnostics. When you go to look into the instrument and blink, they may well be in there. But yeah, so Gooch and House go, right? Obviously it's hardware, it's technology, and I think that they've been impacted by kind of COVID and supply issues, something that they've said before. But they've said they've got record order books, right? 120 million, and you can always kind of look at these, and they're up by nearly 30%. But they said despite the record order book, pandemic-related factors, and there's all sorts can be in there, manufacturing, logistics, shipping. First half revenues expect to be circa 54 million versus 58.5 million previously. Expect to be second half weighted. So this is one where, and they've lowered their PBT, profit estimates, but this is one where you kind of look closely, find out more about it, and see as the sort of supply situations and environment changes. You know what I mean, Andrew? So tough time at the moment, but something that could, in the future as conditions, ease, improve.
But, yeah, but I mean, I don't think conditions are going to improve for a little while. Particularly, I mean, we've got all sorts of so many issues out there.
That's right.
Obviously, we all know about the massive consumer squeeze, but supply chain issues are going to get no better. I mean, Shanghai now is in complete lockdown again.
I
know. Speaking to our Shanghai team that we haven't seen for years, they are not very happy bunnies. The oil price is still high. The cost of shipping is still high. It's pretty tough out there, which is why actually when you see a company reporting good numbers and upbeat expectations, you should be bloody impressed. I mean, the management teams must be doing really well when they do that.
Well, I do, particularly where it's involved in sort of technology, tech hardware, getting a hold of silicon chips in the environment, getting stuff built in this environment is not an easy thing. And so the good news is that people are back visiting casinos. Well, it's good news for Quixent. Ticker is QXT, market cap 99 million. They have full year results. And I don't know if you've come across Quixent before. They're just down the road from me in Newmarket, I think.
I haven't actually, no.
But they Quixent make specialized computer platforms that go into casino gaming machines and slot machines. And I went to an exhibition of these machines at Excel a number of years ago, and bloody hell, they are sophisticated now, these gaming machines. Massive screens, displays, different games that get programmed in, delivered. You can change them, within the casinos real time. So they build and develop all of the hardware and software needed for that. And a lot of the big gaming machine guys outsource this to them. And they concentrate on developing the games themselves. That's what the game companies do. So they had they reported a revenue growth of 37% to $87.1 million ahead of the 2020 number, and to deliver that under the supply conditions that they've been, I thought that was a really strong result. And of course, they got quite high drop through on this into profit, and so the profit, their pre-tax profit, I think, grew to adjusted profit before tax grew to 5.4 million from 1.3 million. So there's a company recovering and on the move, and as long as people keep going to or get back into casinos.
Very impressive. Maybe I'll just update you on a little bit of international news that I found interesting. I'm sure you saw all of this, but I see that Samsung Electronics overnight forecast its highest ever first quarter operating profit since 2018, off the back of strong smartphone and microchip sales. Having said that, it's still got quite a lot of issues, Samsung. I also see that Warren Buffett and his Berkshire Hathaway have bought a stake worth 4.2 billion in HP, the computer and printer maker, which is interesting that he's obviously seeing value there. And of course, Elon Musk has built up this huge stake and is getting onto the board of Twitter.
Yes.
And wants an edit button. And there's obviously a lot of controversy about whether there should be an edit button. I'm actually in favour of the edit button, and the reason being is that I often tweet. I quite like tweeting, actually. I'll be honest, it's all business. But my spelling's terrible and my typing's terrible, and often I tweet and I think, oh God, I've completely misspelt that. And it'd be quite nice to edit it and go and correct it. But you can't at the moment. So personally, I'm all in favour of an edit button for that reason. I don't know about yourself. You're not a big tweeter, are you?
No, I'm not very sure. You'll have to show me what to do, Andrew. I must admit, I'm a bit of a Luddite when it comes to Twitter.
You got any followers? You probably don't even have an account.
Yeah, I do.
How many followers you got, Phil?
Well, look, I'm not discussing this any further.
I'm not quite up to 1,000 yet. That's my target. I do want to go through 1,000. But obviously, I have very loyal Twitter followers. My handle, by the way, if anybody's listening to this and they don't follow me, is monkey. Please follow me. Let's get a few more followers on board.
Absolutely. You can have mine. There we go.
Right. Anything else for this week you want to...
I don't think there is. I think that's it.
I think that's probably about it from me. Now that we have got Easter coming up, I know a lot of people are on holiday this week, so you're probably listening to this podcast whilst you're on holiday. I think people will be. I'm not sure if you're around next Thursday. I'm around, but I'm down in Cornwall doing a bit of mining research because I'm still trying to rejuvenate the entire Cornish mining industry. But we'll find a way of keeping this podcast going over the Easter period. As normal, as I always say, if people have got comments, then please let us know. If people have got any stocks they'd like us to have a look at and then talk about. I'm more than happy to have a quick look at a stock, give it a quick analysis, and I'll tell you what I think. But there you go. Feedback, the comments, we do love them. On that note, Phil, thank you very much.
Excellent. Chat again soon, Andrew.